Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got you don't have any yeah. So I'm not sure if the quarterly refunding announcement is here in 5 minutes. I think it is in 5 minutes. So we got time here though. We go through the charts. But so far things to me look relatively quiet. So yesterday, of course, we had that huge down move. Now, interestingly enough, we didn't really go anywhere since, and in the overnight, we haven't really done anything. We're still right at 4.04, basically. So sucks that I kind of screwed up and didn't catch any of that because that was a big move. S&P 500 also taking the dive and going flat since. Oil actually, taking a little bit of a rise overnight, but then crashing back down. Natural gas hasn't really done anything too interesting for a while. It was just kind of ranging in there. Gold and silver are looking okay. They're actually above their moving averages now, so. Then, okay, come back over here. Bitcoin, did a little bit of a rise, then come back. It's basically, it's going nowhere. Bitcoin and the dollar, big move up in the dollar, and it's coming back overnight. That's okay. So I do think we have the quarterly refunding announcement here. Let's see here. But the big thing is we've got Federal Reserve meeting today, and we will stream that, of course, by the way. So make sure to come back for that. Let's see here. Forex Live. 210,000 of the jobs in the ADP report were in leisure and hospitality, with most other categories declining. That's interesting. Curious. So we need the music. We need the music. I'm kind of feeling like trying something different today. What do you think? We could do like we could do like their hype tracks, for instance. That wouldn't be bad. Nothing like a good old distorted 808. Nick Demaros, the Fed is trying to tighten financial conditions and keep them tight. Talk about a Fed pivot can be confusing because a slowdown in the pace of hiking doesn't necessarily mean an earlier end to hikes, given the need to keep financial conditions tight. And let's see here. Jigsaw have another beta out. Yep. 401 beta. Tick size compression. They've got it. Maybe I should make a new video but I think I want to make a video about that. So let's switch this. I'm excited to switch this. So I've had this in here for a while. Actually, let's update.
let's update first, okay? I love that it's like public, but they're calling it the beta now. It's kind of funny. 401 beta. It's a major release. Basically, what that means is we think there's still bugs, but we want to put it out. That's what that means. Don't feel bad, Jigsaw. Every developer does it. Allergies have been acting up a bit more last day or two. So I'm going to close Jigsaw here. No, actually, we're going to wait here for just a second. Wait here for just a second. Make SendKey readable. That's what I'm hoping. Okay, so we are seeing some movement here. US to sell 21 billion. Let's see here. Pika has a bunch of stuff. Treasury says it continues to meet with a variety of market participants to assess costs and benefits of buybacks. Will share fundings in future refundings, provide ample notice. Treasury says it will increase 5-year TIPS reopening auction by 1 billion to 19 billion. Oh, interesting. So part of the way that they're going to deal with these problems with inflation is by just issuing a lot more Treasury inflation protected securities. Treasury says it will maintain 10-year TIPS. Reopening auction size at 15, maintain January 10-year TIPS, new issue size at 17. Quarterly refunding of 96 billion to raise about 40.7 billion of cash, refund 55.3 billion in maturing securities. No decision on whether or how to implement a buyback program. Treasury says it does not anticipate making changes to current coupon and FRM issuance sizes over the November 2020 January quarter. Treasury says it plans to address any unexpected variations in borrowing needs over quarter by changing regular bill auction and cash management bill sizes. Treasury to sell 40 billion 3-year notes, 35 billion 10-year notes, 21 billion 30-year notes and type bonds next week. Okay. So now we can close Jigsaw and we can update. Good morning, Mission. Good morning, Dan. Good morning, Zach. Zach, you're always like first now. Bravo. I only have 17 gigabytes left. I've got a new drive coming, so we'll be able to fix that. Yeah, it's gonna make me restart NinjaTrader, even though I don't. I gotta shut down NinjaTrader too. Nick Timmeros, one way to think about this tightening has 3 stages: raising rates rapidly to catch up, 2, raising rates at a slower pace, 3, holding rates at a given high level. With this framing, there are 3 potential shifts that could be described as a quote-unquote pivot. Okay. Goldman Sachs CEO David Solomon says deal activity could rebound next year as corporate issuers and investors get used to tougher conditions. Yeah, I hope so. That is what needs to happen. Okay, now we start Jigsaw up.
Good morning, Steven. Guess we'll start up Ninja Trader. Wait for everything to get loaded up and functioning correctly before I go into this. Yep. Joseph Wing pointing out no boy buyback program this quarter. Was I about to say boy back this quarter? Ew. Am I forgetting how to speak? What the heck? Good morning, Kay. So we did get some decent movement off of all of that, but nothing too pivotal. I think that the buyback announcement was kind of like a potential stumbling block for the markets. It looks like they didn't rock the boat too much. I do kind of wonder, I have to say, this is totally a thing. Is everybody saying like the Federal Reserve doesn't want to do anything too big in front of the midterms? 100%. And back, let's see here. How many elections have I seen now? 2016, 2018, 2020. Yeah, so of the 3 elections that I've seen this every time, that the Federal Reserve meeting just before the election tends to be pretty muted. In fact, we've had one time, I think it was in the 2018 one, where it was like they were really tepid before the election, and then the one after the election was the one where they like screwed the pooch. Like that was the one where he was like, no, everything's fine, and the market's like, no, it's not fine, you need to lower interest rates, and they throw a total fit. And like normally Christmas is like dead markets, right? And it just like kept going down and down and down. It was so bad, right? That was that one. So Federal Reserve meeting today likely to be quieter. They don't want to rock the boat. Okay, so Jigsaw, the new feature, tick compression. So I've had it on here in a while, and I've just like never said anything about it. But you see there's this option right here, tick multiplier. So I can do it by 4. I'm going to do it by 4. And what that means is that I will have a price for every whole point in the S&P 500 instead of every quarter point. I click OK here. Hopefully it works. Come on. I don't think you like that. There we go. All right. So you see a lot more liquidity. It's a lot more like the ZB, right? But it's because I'm compressing four ticks into 1 tick. Tick compression. I really liked the word that they used for it. So that means that I can come in here into the settings and make my ES DOM as big as the other ones again. Just very, very, very nice. I think we're at 14, right? Yeah, 14. 14. And we'll just, how do I do this? Can I change the formatting of it? Price. Oh, I can't. Oh, that sucks. I don't think there is a property to change the now, but they've changed something in there, so that's one that they need to fix. So I should be able to bring that in, and oh, actually, it has always been from that side, isn't it? I'd like to be able to make it so that it just doesn't show the zeros. But that's okay. So I'll adjust that like that. Now our chart is a little bit smaller. But it'll be a lot easier to keep track of what the S&P 500 is doing from that. So I really like that feature. What they have some other stuff in here too, though. Let's see here. We've added shortcut keys for moving orders. Oh, that's interesting. We have added spread coloring to the price column. It is optional and explained in the video here. Okay, yeah, that's it. Then they have charts. They have vertex line chart, step chart, colored high-low close bar chart, scatter plot, histogram chart. New indicators: Bollinger percentage, Guppy, multiple moving average, intraday momentum cross, moving average cross, performance, IDX, twigs, money flow, volatility cone. Improved performance of CQG API using more threads for each individual message type to prevent queuing of messages. That's good. So let's try pulling up these new chart types, shall we? Shall we? I'll do ZN. And yeah, click OK. I think that's what I gotta do here first. Looks like the treasuries are on the move up, by the way. So you get a vertex line. What is a vertex line chart? Oh, it's a line chart, but with a little bit more clear things where the closing price is. Step chart. Where's step chart? Scatter plot. Okay. And then we'll do it as a histogram too. There's the histogram. That one might, I'm wondering if, you know, because if they go into, you can make your own indicators, and then we might have indicators that will be like a histogram, and then maybe that will be useful. Histogram, colored high-low close bar. Oh, gotcha. But which one is step? I didn't see step on that list. Step, there it is. Okay. Yeah, I like step. So if I'm doing it the 10-year, step can be kind of useful because I can come in here. So the other thing is they gave us different time frames, right? So I can change my interval type to be tick, for instance. And just make it one tick. No, it didn't like that. It didn't like that. Didn't want me to do one ticks, apparently. That's too tight, apparently. There you go. Can it do, I think it can do range chart now too, right? So if I change this to a one range. Oh no, you can't do one range yet. It must, I think that one range is coming though. 1 minute range bars. I want them, I still need a couple more settings. So like, Skill size, session breaks, extended hours, end date, days to load, interval type. Customize. Toolbars, tools. So can I just like not show it? Yeah. Okay. Commands. Okay. Options. Okay, so you can get rid of the toolbar, which I kind of prefer. Actually, can I? Okay. If I get rid of the toolbar, though, then it might be difficult to change things around. But I would like a watermark. If I had a watermark, then I think we could probably have chart pretty. I mean, you can't change the colors either. That's something that bothers me, but So that's the new version. I really think that tick compression is a game-changing feature, to be honest with you. I did want to make a video like as soon as that came out, but I don't know. I don't feel like I could make it just like at this exact moment, and I don't know if it would really be all that worthwhile to have it put it out next Monday. Oh man, it's hot. Here's the okay, yeah, I got the heater closed. That sucks. Let's check the nest. What does the nest say? NASDAQ killer, where have you been? How you doing? I know where you've been. You've been doing school. So I was when this came up yesterday with the kids because when I was a baby, they would call me Sethy Wethy. You know, and so it was like you can like little kid eyes, you know, any name like that, can't you? Well, Asher Washer, that doesn't really. Then Ethan Weethan, that's even more weird. So see, it doesn't actually work that way. It was just my name that worked for. So NASDAQ killer, since you just popped in here and you missed it, well, let's pull one up for you here, right? So here on Jigsaw, we can say NQ. We'll do NQ futures, and we'll do the tick multiplier of 4. So what that means is it'll make, instead of quarter points, it'll just do 1 point, right? So click OK. And there you go. You got full points there in NQ. So that you can see what the DOM is doing without it being nearly so volatile. Nearly so volatile. I think that would be really useful in trying to read the NQ. I'm gonna close that because I had the account. It was armed and I don't want to click on it. I'm afraid I would click on it. I am wondering here. So the ZB, I wouldn't say that there's necessarily like really strong volume behind it per se, but the 30-year came all the way down there to the bottom. I'm detecting a hint of steepening though, so it may just be the steepener. I don't know if that means that we're actually going to go lower. When I look at the 6J, that's kind of flat. When I look at the dollar index, that's pretty flat. So oh, interesting. Bill issuance will rise by 500 billion, helping drain the reverse repo facility, says Joseph Wang, pointing out a lot of good information here. Nick Timmerell, several analysts have argued that the one true pivot, the capital P pivot, comes when the Fed shifts away from focusing solely on inflation to focusing on balancing risks on both sides of the mandate. Market pricing suggests this is still many months away. I program the limit so I can see them in a fixed position 6 years. I don't understand what you mean by that, but okay. Okay, so Trading Floor Audio is retweeting this link from Nick Timmerell on the New York Times about the Fed faces tough decisions as inflation lingers and economic risks loom. From the New York Times. Oh, you don't use a ladder style of order book? You're using CQG platform, aren't you? The ladder style is too volatile in NQ. Yeah, it is. Definitely is. Well, it was becoming too volatile in ES, but now that we can do tick compression, oh, it's so much better, isn't it? I think like that right there, that's 10 points. Average move. I'm liking it. I'm liking it. Perfect. And we can have the font size nice and big again. Do I actually use 14 over here as the font size? No, I use 16. So let's change this to 16. Appearance. 16. Well, I think we can scrunch this down a tad. This song is hype. There we go. Perfect. I go back and look and try and figure out what it is that you're using then. Oh, Nassim. So it's funny watching everybody come in and comment on whether you should have to pay for the Twitter blue check program. So for instance, our friend Gary Norden, he said that it's the people that want to remain anonymous that should have to pay. I was like, actually, that's a good point. Because it's the problem is all of these like random accounts that like try and copy people and skit. Like that's why it originally started out, was that people would try and pretend that you're you, right? But anyways, Nassim Taleb is wading into the debate now. It is a great idea to charge something for Twitter, whether to be chucked or optimally just to post on the platform. Why? Skin in the game. I do think, well, so like here's the thing. If you're a blue check, because there's like strict requirements to have a blue check. Like I don't think based on their existing requirements, if maybe it changes. Maybe it changes. But with what it was right now, or before Elon Musk bought it, let's say, with what it was before Elon Musk bought it, I would not qualify for a blue check. Don't have enough followers to qualify for it. So if you have to be a mover and shaker already to be a blue check, then $20 a month is nothing. In fact, if you're a big celebrity, it should be more. It should be more to have the blue check. But Elon Musk was trying to negotiate with them, with Stephen King being like, "What about $8?" I think that some of these blue checks are just going to hate it no matter what, just because it's Elon. But I only want the cream. I don't need the chaff. Well, so how does it display then? Do you just only see the inside or something? Anyways, I think that I think that celebrities should have to pay like $50. Like that would be a fair price for if you really have to be a quote unquote influencer, right? Oh, Lloyd Blankfein's tweeting. What's he say? I imagine Jay Powell and the rest of the Fed governors are right now sitting with a thesaurus, trying to find the word that means pause or not pause, depending on who's listening. I could display it in any way that I want for sure, but I can't really at the moment think of a more optimal way to display it than what already exists. Unless you're just going to look at like the raw messages. Well, that's it. So you're saying you look at the raw messages? Well, that's it for you. Yeah. I'm not creative enough, apparently. Yeah, the heat map is okay. The thing with the heat map, I think that the heat map really biases you towards a certain thing, right? Because basically you will see the prices where there's lots of liquidity. So the heat map really biases traders towards looking for those areas of liquidity to be support and resistance, or looking for price to move towards those areas of liquidity, right? Or people that really like the heat map, that's the way that they tend to go. And I have not found that kind of information to really be pertinent like that. It's really more about, okay, there's more liquidity here than here. So like if I look here on the treasury, liquidity not so good today. Liquidity not so good today. We're only putting up 600s right now. Okay, but there is 1,000 here. So that's a little bit that they're going to have to get through. If there is a strong trend though, and they do get through that, then there's a slip all the way up to 28. So I'm not looking at that 28 as like that's where they're going to be attracted to that 28. I'm just looking at the liquidity is a little bit lighter through this area. So if a trend comes through, what's going to happen? They're going to go, right? It's going to take more time to get through those prices because there's more orders there. And then when they get to that price, maybe 1,000 doesn't actually trade. Maybe that pulls in only 200 trades. That tells me something about what the market maker is thinking right now, right? That's what I think matters, or not what I think matters, but you really, the stuff that we have that is like empirically based is based more on the latent liquidity. So seeing what's resting out there is an important part of that, but it's not the full story. You have to to watch and see what trades as it moves around, right? So that's why I'm not particularly, especially for the treasuries, I'm not particularly a fan of the heat map way of displaying things, because like the actual numbers in there and seeing what happens on the inside really matters. And to really see that, you have to like create another create one where it's filtered to just the inside. Man, so it's gotten cold outside in my, so the heater and the AC and everything in my house is adjusting, and it's just really hot in this room today. I have the vent closed, but it's still warm, and I was blowing the air in here. It's still warm. Oh, we get what are we getting news here at the top of the hour? Singapore manufacturing PMI 49.7 versus an expected 49.8, so almost exactly in line. Did Brand post today? Talking about our friend from Forex, or sorry, from Axia? I don't think he has. Actually. Well, maybe if I go further back. Oh, yep, yes, 2 hours ago. The outlier to watch for very closely today from the Fed is a little policy trick they used in 2018 when Trump started the trade war tariffs with China. The Fed included increased risks due to international developments in the statement. This, in addition to the mandate, led to the flip-flop in December 18 and the cutting cycle of 2019. The Fed was no longer driven by a dual mandate, given impact of strong dollar and subsequent turmoil in global rates markets. Don't be surprised to see this dovish outcome today. I think highly unlikely. I think what you're going to see today is surprisingly little. A lot of supposed order book analyzers fall into these because in the end, what happens is they're trying to apply technical analysis to order flow, right? So anytime that I come in here and I look at what I see on the DOM and I say, because I see X on the DOM, I think that Y scenario is more likely than Z scenario, you're applying technical analysis. And why does technical analysis not work? Because the deciding factor in all of this ends up being the market orders. And none of this information predicts what the market orders are going to do very well, right? So we need to take a step back. Instead of using past data to try and predict future data, instead we use other information that we have, current data, to predict the market orders. For instance, I think that because it's a Federal Reserve meeting, you're going to see more people selling treasuries to hedge themselves ahead of the Fed meeting. Maybe. I don't think that you're going to see too much movement here this morning. It's already kind of hinting that they're just going to stay pat. But let's just say that I thought that there was going to be a lot of market sells because of the Federal Reserve meeting today, right? Well, then I can come in, and if I have the market orders and I know what the resting orders are, and I have an idea of what the latent liquidity is like, now I can predict with a very high degree of accuracy what's going to happen, right? If I knew that those orders are going to come in, it's probably not too difficult for them to slip to new lows down to 18 and 17, right? But then it might be a little bit more thick. And if we're really going to get that many orders, and so I think it would have to be more than a 10 to 15K cumulative delta move. But then if we did get below those levels, then there's another slip all the way down to 12, right? And then I can kind of use those big orders as kind of like benchmarks about how far they might go during a trend, right? But that all depends on knowing what the market orders are doing, and I'm knowing what the market orders are going to do based on predictors of order flow changes in expectation about future fundamentals and order flows. Information about different types of large institutional strategies that may help me predict what they might need to do in a situation like this. Like they might need to hedge themselves, right? Predictors of order flow. Because the past data doesn't predict the future data very well. Right? And the thing is that I'm gonna say all of that, and you're probably going to see me in certain situations apply technical analysis. Just because, like, that's our tendency as humans, and we will apply it without even realizing it, essentially, right? I am kind of tempted to do something, but I don't think I'm going to take any trades here this morning. It's pretty slow. Wonder if someone is going to get some Nobel Prizes today? Wait, what? Didn't they already do all of that? What's this tweet about? Since this was posted, it's only gone down. Meh. It was just a noise trade on yes, is what that was about. I will note that while the market looks super quiet and I don't expect a whole lot to happen, it also seems like all of the markets are pretty closely correlated right now. But I think that would be in line with the theory that there's not a lot of trade going on right now. So it's only correlations and small oscillations driving the market. I wonder if someone is going to be left holding the bag today. Nah, I think that anytime you have a Federal Reserve meeting, there's like massive volatility and the market makes a move one way or another just because the traders are all sitting there with their fingers on the trigger, ready to do something. But I really don't think that the Fed is going to rock the boat because of the midterms. This has been what they've done in the past. Is they don't want to do anything too significant. Now, because they already came in and said, things, they are going to talk about like what are their plans to shift towards from massively increasing rates to just kind of only increasing rates gradually, right? They might talk about that. They might talk about how do we keep the treasury market from falling apart. So the market may, see those things and make really big reads into it, right? But overall, I don't think that they're going to do anything too terribly significant. And if they do, and if anything that they do would be likely to be dovish, would be likely to be supportive of the S&P 500. Could be wrong. They could come in and say, well, we really didn't like that jobs number yesterday, so now we're going to raise rates 100 basis points. Or, when Nick said that we were only going to do 50 basis points in December, we're now leaning towards 75 basis points in December. I mean, that the possibility for surprise is there. But the market right now is saying that nobody really thinks that there's much point in trying to take some big position ahead of it. They don't think that the reward in speculating over this particular FOMC is worth it. Senior German government official, as China has changed, it is no longer possible to conduct business as usual. Now, non-farms on Friday. That's going to be an event. Especially since both of the tea leaves that we've gotten so far. So tomorrow we get a really important one because we get like jobless claims and all that sort of stuff, right? So we don't have all the data points yet, just to be clear. But the data points that we have gotten in so far suggest a good jobs report. Actually, do we have consensus estimates for that yet? Let's go look. This week. We do. They're expecting 190K versus a previous reading of 263K. Well, that's interesting to me. So if I come over here and I do a chart, they're expecting 190, which is just a decent projection of, you know, like if you say that the jobless claim or that the job creation is just going to can gently decline along this line, that would put us at 190. Note though, look at this. The actual has outperformed the consensus expectation now 1, 2, 3, 4, 5, 6 reports in a row. So they're notoriously bad at predicting what the non-farm employment change is going to be. And I think the one that would really concern me is like, so they're expecting 190. Okay. Last reading was let's say 270. If it's above 270 this month, ooh, look out below. Look out below if we created more jobs this month than last month. I don't know if the job openings metric is really, my understanding is that metric is really lagged, and that there's a lot of noise in it, that not all of those job postings are like genuine job offers and things like that. Like companies have reasons to put job postings out there even when they're not really actively trying to hire for it. Waiting for Lincoln to congratulate BB like Lua did. Did BB win? Wait. Did I miss something there? I saw a story the other day about how there was a chance that BB would get put back into power, but I didn't think that they were doing elections that soon. Ah, there we go. China reopening rumors dispelled as Beijing confirms zero COVID policy. Exposures, ETFs with exposure to China slid on the news. Maybe this person is saying that in the future, if BB wins, that he won't get a congratulations from Biden. Maybe that's it. Ugh. That just reminds me of that story. Did you guys see this bizarre story where this one of the co-creators of MakerDAO stablecoin, so it's kind of like a stablecoin with kind of like a Federal Reserve kind of element to it, where the holders vote on the monetary policy essentially. And he was all saying that the CIA and Mossad were gonna kill him and all this like crazy stuff, and then he drowned. A week later, he drowns. So now all of the conspiracy theories are going like wild about it. Of course. I mean, I have a hard time understanding why intelligence agencies would have that much interest in a person of that nature. You know, seems a little crazy to me, but he did die. So what do I say? Why do I even bring that up? I'm just bringing up, I'm bringing that up to call it a conspiracy theory, right? Because we have to go along with whatever the globalist narrative is going to be. So the globalist narrative has to be that, it was just a coincidence, right? I could go the other way. I could go the other way and just say, like, this is a conspiracy. We need to be very concerned about this. That works too. And I saw this, who was it? I saw this guy he used to be very far right, and he worked with like InfoWars and all these guys. And he said that there were many times where he was doing a story and they really like amped things up and made it seem worse than it actually was. And it really bothered him. And when he would bring his concerns up to people, they would say, oh, well, it's important for us to hype things up and get the views, because if we don't, then the left will get them. Isn't that so awful? And he said, oh, I just went along with it because I thought that was the vital thing to just, help defeat the leftists or whatever. And I don't think that is. I think that the bigger goal here is to help the country overall. And to do that, I think that we need accuracy. I think that we need accuracy in our reporting. Maybe it's just me. I think that we want to try and be nuanced and accurate in our reporting, and not necessarily be going for the top views. I mean, because really, this is the fatal flaw of social media, right? Is that social media, it basically teaches everybody to try and be narcissistic, to be concerned about what everybody thinks of you, and to try and highlight your achievements to the world so that you'll get more attention and more clout on social media. And it attracts these absolute psychopaths, right? And then everybody that wants to be an influencer in order to compete with the psychopaths, feel like they have to do the same kind of hype. And so it like trains everybody to be narcissistic, even if that's like not their natural proclivity. Right? I saw a video from Jordan Peterson the other day, and he was saying, because this was in his interview with Piers Morgan, and he said that I understand why many women are fed up with men in general, because you have many men that are, what is the word that I just used? Narcissistic, self-absorbed personalities, and young women especially seem to have a difficult time judging the difference between confident competence and narcissism. So and especially online, I would add. He didn't say that part, but I'd say it has to do with online, right? So what's the difference? Well, somebody that's just confidently competent is just going to do their thing, and they don't necessarily care if everybody notices, because they just want to be successful in their thing, and they care about other people. They're not constantly trying to be grand. They're willing to admit when they're wrong about things, right? The narcissist person can never admit to being wrong. That would be just awful, right? And yeah, social media doesn't really highlight those people, does it? Social media highlights the people that are the biggest self-promoters. Something particularly relevant for us in trading, because not everybody that's up there in the top of the trading world in terms of like a influencer sense is like, trying to scam you or anything. But this definitely plays a part into trading. that the people at the top, they're not there because they're the best traders necessarily. The best trader is probably going to lay low. And that applies to me too. I would, when I'm doing well, I would rather lay low. So somebody's pointing out here that the amount of liquidity that's basically being added to the economy from the rebalancing is basically about $100 billion. That it's equal to an entire month of quantitative tightening. The market's not really reacting too strongly to it, though. That kind of suggests that it's really within what they expected. Well, we are seeing the 5-year lead the way down here on a flattener. And so earlier I was talking through a scenario. Maybe people want to hedge for the Federal Reserve meeting or worried about hawkishness and are selling. Maybe that's what we're seeing. It does seem to be a spread change here, though, because the volume in the 30-year is definitely to the upside. So you're getting 5 years leading lower and flattening across the curve. Oh, here you go. The Wall Street Journal. The celebrities leaving Twitter after Elon Musk's takeover. I want to see that. Are you going to have a list? Sarah Bareilles, I have no clue who that is. Tony Braxton, that sounds familiar. I think she's a singer, right? Leone Branco. This is a bunch of people I don't know. I don't know any of these people. Stephen King. Stephen King's the only celebrity on that list worth talking about. Well, as soon as I said, like, they're heading down, like, they pivoted back up there pretty quickly, didn't they? Also, S&P 500 pretty quiet here this morning, too. Do you follow any options data at all? So I do not regularly come in and look at options, but I read a lot of Wall Street analysis. And that's always going to include stuff like a reading of the current gamma positions from Charlie McElligott and stuff like that. So I'm generally aware of where things are sitting. So if you're looking for kind of like, is there anything in the options that might help us today here on the FOMC? Well, what I'm seeing in the options or in my research rather, is that there is a lot, and I mean a lot less options positions on the market now. And that volatility has become significantly more tame as of late. So there is not as many people looking for protection. When you don't have all of those options positions on, it can make it more difficult for the market to move, but it also makes the market more exposed to a downside risk. So if the Federal Reserve were to come out today and say something very hawkishly unexpected, say something very unexpectedly hawkish. So if Powell came in and said something very unexpectedly hawkish today, the S&P 500 would be very, very vulnerable to a downside move. But the options are suggesting that they don't think anything too interesting is actually going to happen. Right? So the treasury's just coming back to VWAP and just kind of chilling. I got something inside of me being like, let's go, let's do something. We need to make a trade. We need to, no, we don't. I mean, maybe that's the part of me that like wants tons and tons of people to be watching the live stream, and the more trades we make, the more interested people tend to be. But nah, I think you're going to see plenty of action during the Federal Reserve meeting. It's probably best for us to just kind of chill and relax here this morning. I think part of it is also that I just seem to have a little bit more energy today. Had a good man yesterday. It smoked some chicken. So good. And I had so much energy after that too. Oh, now that's interesting. The 30-year broke the highs there. But that was like I was saying, flattening across the board. Is the 30-year going to drag us higher? I was kind of overtrading the latest meeting, so I'll stay. Yeah, I mean, on overall, less likely for there to be a real tradable catalyst from this Federal Reserve meeting, right? But the other side of that is that because the volatility is going to be a little bit more tame, you might have better volatility for trading from that perspective. So I wouldn't be surprised to see a bunch of equity traders coming in here today and making some big trades and having some success, getting lucky basically. So it's the most interesting thing to me right now is that we are on the precipice of a new age in social media. We really are. I don't know if that means that it's going to be better or like how different it's going to be, but it's very clear that the entire social media landscape is changing everywhere. This week in particular, you are seeing a change everywhere, right? So we already saw Facebook just get absolutely punished, right? And then Twitter got bought by Elon Musk. And on the YouTube front, YouTube changed their interface. Have you seen the new YouTube interface? I really like it. Well, there's some things I don't like about it, but they made they fixed my biggest pet peeve. See here, I'll show you the channel. So now when you come in here, look, there's a tab for videos, a tab for shorts, and a tab for live. That, oh my gosh, that fixes the biggest problem that I have. Oh man, so I came in and I like I wouldn't say republished, but made public again all of my past live streams. Before you could only access them from the playlist. Before you could only access them from the playlist, but now you just get the whole tab, right? But it doesn't look like they're actually like in order, which is kind of funny because it's going by recently uploaded instead of just popular. It's interesting to me that the Earthquake stream is more popular than the GameStop one. But there was two of those for GameStop. So 19K views, really. And the Bitcoin one is, I don't know if I'm ever going to top 21,000. I think that the peak was like 10K. I don't think I'm ever going to top that. I would love to mute shorts. Well, so I believe that the algorithm, I wear this gray shirt a lot more often than I realize. I need more clothes, I think. That's what I think. I think I need more clothes. But I think when you come here on the front page, I think that like what it shows you will start to adjust to you know, what you tend to click on. So like what I'm noticing is that now that like if I come to my notifications, you know, like there's a bunch of comments on these old live streams. So it's like these robots and stuff are seeing it and coming in. Right? I'm just gonna, these ones didn't have an obvious link or anything like that, so I'm just gonna leave them. But yeah, they're coming in. So I think, I don't know if they changed, because they did make a change at one point where it just pushed out live streams like less often, you know, like it didn't suggest them to you as much. As you click or don't click on them, I think that it treats those content differently. So it says, oh, you like this guy's videos, but you don't like this guy's live videos, or whatever the deal is, right? That's the way it is. So I'm interested now, because we got I don't want to view his live stream, but okay, so if you come to Trades by Matt, he does have the live, but he only has the current video, and I bet you that goes back to private afterwards. We'll see if he changes it. I give him a month and see if he changes it. But some people are telling me that they like the shorts too. I've been putting my TikToks onto YouTube. I haven't had anything to really do all that super well on YouTube Shorts yet, but oh yeah, the market tomorrow. I didn't get my sound. It drew the line, but I don't remember hearing the sound. Well, the start so far has been sell. Kind of looks like they're selling into it, and there is a decent amount of liquidity holding the line so far. Also, the treasuries, after pushing those highs, I thought, well, the 30-year drag us to new highs. No, it did not. And now the 5-year is at its lows. So I'm seeing spreading, but no clear directional bias in the treasuries. And volume kind of mixed enough that I'm not too confident in any kind of trend developing. Like what I want to see, if I really think that there's supposed to be a large meta order coming through, like some order flow that I can predict, I would typically expect to see cumulative delta and price across the board being fairly in line with each other. And that's not what we're seeing right now, right? So that's saying that the flows are at the moment not very predictive of where we're going. And in fact, if I was absolutely had to trade, kind of suggests that it maybe is better to do the limit orders and kind of look for the mean reversion. Buy 20 and try and take it back off at the VWAP or something like that. Okay, so here's S&P. They're definitely selling it this morning. They're definitely selling it. They're down 10 points. So they're probing below 38.50. So options not as likely to be as strong of a factor here today, but that 38.50 is still a pretty big number and might do some stuff. So Maybe. There's a new guy here in Discord. He sounds pretty excited. Like he's been short and he's like, oh, I'm gonna get it at 38.50. We'll see if he gets it. But I'm kind of skeptical. I'm thinking that we're likely to just continue to trade in this range, right? What did you do? So wait. Did you get like a bunch of alerts? For you guys that have the like the bell icon turned on, did you get like a ton of alerts for all of the live streams that got published in the past? I'm so sorry. You know what? When it happened, okay, so when I saw that YouTube had changed things, and I didn't see my, so you just popped in. Was like, it's funny, we were just showing this, and then I closed it and you showed up. So here, I'll show you. So YouTube changed their interface finally. So now there's this tab for live. So when I came in here and I looked at the tab for live, it was like, there was nothing in here because they have to be public to show in there. What the heck am I doing? What the hell am I doing in that thumbnail? That's so, YouTube. What the heck? Anyways, so I made all of my past live streams public again so that they would show up in this tab and you wouldn't just have to look into the playlists to find them, right? And oh man, it gave you a bunch of alerts. That's hilarious. Well, and it's gonna be like close to 1,000 too, right? Because it was like 5 years. Yeah, this is gonna be tons. Well, here's the thing that drives me crazy about it is that, I mean, I guess it's not in a month, it's not going to matter, but they're not in order. They're not in order at all, right? Like it's coming out in order of when YouTube made it public and not when it was recorded. And there's no way to change the sorting of it. So coming in here and looking for a specific day will be a pain in the butt. At least for anything before November of 2022. I hate it when YouTube shows me my recently watched videos. Their algo is so dumb, it just like shows me my history back. Well, so what I find happens to me, NASDAQ killer, is I'll watch a video and I switch between accounts because I still have my account that I originally started YouTube with. And so that one has different subscriptions and everything, right? So I would prefer to watch on that one because that one should be like the one that'll really give me recommendations. And then if I'm watching something on trading, then I'll watch it over on this one, right? But it doesn't always catch which one you're watching it on. And so what'll happen is I'll watch it on one account and then I'll go to the other account and it will recommend the same video, right? That's super annoying, right? But overall, this change is a big change. I know it seems like something so trivial, but that was my biggest annoyance. That was far and away the most annoying thing for me was that you had to basically make your lives, hide your lives and put them in a playlist later. So now we can kind of go back to the way that we had things before, which is a good thing. And this page right here, this video, this one looks nice now. I was like, oh man, I have so many great videos. Look at this. 5 reasons to trade micro yield futures. That's great. Why price action trading is garbage. I loved that video. DX full depth of market order flow for stocks. Oh, great. This one right here, underrated video. How Gamma, or at least I underrated it. You guys have been watching it, but this one, how Gamma broke markets, how to take advantage of options Gamma hedging. Great video. It's getting close to a 1,000 views. It's funny, this KVM switch one did well. Well, really what that means is that people are more interested in computer hardware and stuff for their desktop setup than they are for trading. That's what I need to do, guys. I just need to rebrand. I am now a computer hardware channel. We'll have a video soon on a new desk I'm building. Maybe we'll do chair reviews. Clearly, that's where I do well. You are a programmer. I could do more stuff with, I do want to do more stuff with programming. You know, like one of the things is that then the amount, actually, can I see it? Let's see here. Let's come to the studio and look at the analytics. And I'm going to change it to be the lifetime. And I'm going to come here to content, I think it is. Looks like they changed the analytics too. Videos. How viewers find your videos. YouTube search. And then I think I can click on YouTube search right here and it should drill down, right? Okay. So my keywords are trading computer setup, DOM trading, order flow trading. That's good. Okay. But really we need like NinjaTrader. So that needs to be higher. Especially if we're going to get more people to use our indicators. We're going to get more people to use our NinjaTrader indicators. Got to make a lot more content about NinjaTrader. So I don't know, maybe, you know, I really like this tick compression thing. I don't know if it really is worth like making a video about it anymore. Like a few weeks ago would have been a great opportunity to do it, but now, it's funny. Andrew Yang and Gillette are top ones too for me. No, we need more Jigsaw NinjaTrader. Actually, where is Jigsaw on this list? It doesn't, because my top futures trading platform, right there, best futures trading platform, I'm not actually searching for Jigsaw. So I need to make the NinjaTrader tips video. I need to make my Jigsaw setup video. Yep, that's what I need. Those are the two things that I think my channel is lacking the most right now. I think it's because the gaming kids, they want it. Well, it's a larger audience. So basically what it ends up being is like when it comes to futures trading, I am like an area expert. When it comes to like funded trading programs, I'm like an area expert. I still get a lot of, you know, probing, I guess you could say, from the funded trader programs, you know, looking to try and get me to do affiliate programs or whatever the deal is. If they want to do a sponsored video, I'm all for it, because like I'm not adversarial towards the funded trader programs. It's just I don't think they're for me, and I'm not really encouraging my viewers to go and use them. Okay, but that doesn't mean that there's not some value to to those programs where some viewers might find useful, right? And especially if they're going to help me make content, then of course I'm going to jump at that chance, because in the end, it's helping you guys if we're making better content, right? So if they want to do sponsored videos, then I'll totally do it, but not affiliate programs, because I don't feel like the affiliate programs really help the channel or help you. But they still come back a lot, right? So that's like areas where I'm an expert. And the issue is that the amount of traffic that comes through in areas that I am an expert pales in comparison to these larger areas where I'm not an expert, but there's so many more people searching for that thing that you'll get a lot of views from that. But the kind of, it's a double-edged sword, because then YouTube wants to think, okay, if this person is into computer hardware, then I'm going to show him Seth's page and Seth's videos about it. But if they're interested in stocks in the Federal Reserve and so on and so forth, they're not being sent to my channel. So like Federal Reserve was not one of my top keywords there. I have a video about the Federal Reserve. I probably need to make more videos about the Federal Reserve so that it'll start sending them more this way. So that's maybe another spot that I can kind of improve. But I think that I would really like to see more traffic come through about NinjaTrader and Jigsaw specifically. So G59, good morning. I haven't seen you in a few days. Anyways, but the point is that like if I was going in and I was making YouTube content that was just about like cool peripherals for your computer, I could probably have a mildly successful YouTube channel. I guess it would probably be about as successful as this is metric wise, because you get a lower click, what is it? A lower CPM and all that sort of thing. But it's kind of funny, right? But there's definitely an audience out there about stocks and stuff. It's not sending that sort of information to me. I think it's because people search for stocks and we don't talk about stocks, right? Oh, you failed an eval, so you took a break from all trading content. Oh, that sucks, dude. Well, this is just why I don't like the trader evaluations, is that I feel that the trader evaluations push you to take risk. They push you to take excessive risk. Now, Seth should probably take more risks, right? There are certain situations where Seth could have made big old mondo money and he's too afraid to do it, right? It's like he's too afraid to click in, or he's afraid to size up, or he takes the profits too quickly, etc. Or like I'm probably too conservative. But the combines, funded trader programs, let's call them FTPs, they force you to trade in a way that's too risky. And then you get this, then you blow the account and then you feel bad about it, right? Feel bad about it, but you shouldn't, G59, because that's like what everybody does, right? But what I want to do is I want to come in, and if I can trade one micro contract and pay for my commissions and my data fees for the month, which is what I've been doing since I started this account, since basically July. So almost 6 months now. I've been paying for the data fees, right? That's really good. That's a great start. And if you can go from there and you can size up, that's you're gonna have a reliable profitability. It would be tiny, but you'll make money from that. I think we need a little bit more time. I think that 4 months is not long enough, right? I'm just a hop and a skip away, like 1 or 2 bad decisions away from losing it all, right? So still a ways to go. But what's different from the way I trade now compared to like 2020? More conservative. Only trade when I really strongly feel like there's a reason to trade. Way less trades. I will still go into these modes where it's like I want to take a trade, and then I'll get like a bunch of losers in a row. So I think I still need to work on that. But even when I do that, I take a bunch of losers in a row, the damage is still pretty minuscule compared to when I make the winners. So we're doing good. So it has now been 20 minutes and we're still just chilling around 38.50. I think it's partly because futures is so different because I used to just trade equity. Oh, well, it's definitely a different game from equity options. I mean, I think this is the whole idea behind the event futures, right? Is to basically give you the opportunity to do an options like setup, right? And that should be beneficial for beginning traders, but I don't know. I'm kind of worried that most people just will blow their money in on bets that don't pay out, right? Yeah, I think this weekend, like I keep thinking, it keeps popping up into my head. I really think that this weekend I should record a video with my top Ninja Trader tips. I like it. And in that video, I can highlight the free pack that I got, right? Wowzers, what? What are you talking about? By the way, can you? Oh yeah, you can. You can make an alert on any of these, so that I can say at this time, this thing happens. Alert. Conditions. Equals time. I've never set up an alert before. Conditions, and then text, actions, sound. Yeah. That's maybe one thing that we should talk about in that video too. What are my tips? I have a little document. Maybe I'll just add that to that list. How many do we got? Yes, the previous day open, high, low, close indicator. That one is so useful. Current price indicator, that's another one that's really cool, that's kind of hidden in there, a lot of people don't think about. Oh, and then I got my remove labels little trick. That one's so fun. Scroll to change the ordering of the drawing. Transparent plots, that's one that they do not really mention anywhere. That's like really important. It's like if you make a transparent plot, it doesn't plot it. The Ninja script output window, that's another one that, like, anytime you have an error, anytime that something in Ninja Trader breaks, you want to be looking at your Ninja script output window, and a lot of people just don't ever think to look at it. I have a bunch of things. I have my bar debug, more watermark, setting your commissions. Yep, don't backtest with non-time-based bars. And then here we go. Alerts from drawing objects. So if you have no indications or expectations for order flow, you therefore take no trade. Yeah, exactly. I mean, I'm still going to be sitting here because I could get new information that might give me that trade, right? But unless I read something on Twitter or hear something on my news squawk, or I just see a really big move develop that I just can't ignore, probably not going to take a trade today, right? I gotta tell you, like, it's kind of funny. Well, I wouldn't say I only trade news slash, let's say information. Sure. I only trade when I believe I have an informational edge. Right? Informational edge meaning information that I believe can predict future order flows. So how I would that would be like the most technical way. It's not a very, when I say those things, probably to that lay person, it's like, well, that's a bunch of noise, right? I should just say, yeah, I only trade news. Basically, I only trade news, because that's the way that the average person thinks about it. But for you guys that you've been trading, I mean, you've been around here for a long time, Andre, right? For you guys, I want to use that terminology so that you understand. It's not just about breaking news or economic numbers or things like that. There can be things that predict order flow that like have absolutely nothing to do with fundamentals, like options positioning, fund rebalancing. So some things that I don't think that this matches up with the terminology the technical analysis people use, but you could call it technicals, right? You could call it technicals, things relating more to the market itself rather than a change in fundamentals, right? So that's why I don't like to use the term like we're just trading the news, right? Because the way this started was like, I'm just only going to trade the news. Like, why? Here's how I came to this kind of conclusion of things, okay? I was doing really well at the beginning of 2020. And then just before COVID hit, I made a mistake. I can't remember what the mistake was. It's funny how your mind like erases those things, but I think it was a mistake that had nothing to, it was like a misclick or something like that. It was like I traded on the S&P 500 full when I didn't want to and lost $500 or something like that, right? So I wasn't able to participate in the whole S&P 500 down thing. It was probably a good thing too, because if I had tried trading in all of that insane volatility, like it would have been bad. I would have blown the account anyways, right? But that meant that I kind of put myself on hiatus through most of this COVID stuff. And there was times where I could have just been, well, just buy the S&P 500 and I could have made big money, right? And when we got into like May of 2020, I was still like trying to work on my strategy. And that was when we were really focused on time frame confluence. So we're like, if all of the time frames are pointed up, then maybe we'll take a trade. And there's some interesting, it's definitely an interesting statistical outlay. But ultimately what happened was, it was like May, I was winning every day. And I'm like, okay, maybe this does work, but let's just give it time. And then it started doing dismal. And I started doing dismal, and again, you get back into this thing. It's like, does the strategy not work? Is it me? What's going wrong here? Right? And it was at that point that I said, nah, this doesn't work. It's just, you know better. It's just technical analysis. So why don't you just focus only on the news? So that's what I started doing, is I only focused on the news. I basically was only taking trades when it was the, only took when it was like economic news, right? Started trading the treasuries a little bit more again. And then during that time was when I started learning a lot more about the market microstructure. I mean, I already knew a lot before that, but this is when I really started to understand the research, and I could really understand what I was reading. And I found where to find the research and stuff like that was after 2020, later part of 2020. And that allowed me to shift it from, okay, it's not just news. It's informational inefficiency though. Informational inefficiency, but it's not just news. It's not just fundamentals. There's all sorts of things that can predict order flows, but movement of price itself is not very effective at predicting future order flows, right? So that's the shift that I made. So for you that are in trading, I use that terminology because that's kind of like the terms that you're going to read and research. And the way that I try and brand it is we're informed traders, right? And the informed ends up being a broader category, right? What type of math do I need to learn to understand the trades, quotes, and prices? Way above my head, but it seems like an interesting book. So I think if you really want to go in and like derive the equations and stuff, you're going to find that most of the time, the math that they're actually using to do it is not that sophisticated. So for instance, in the Kyle model, so I don't think they get to the Kyle model until like page 350 or something like that. There's a whole bunch of stuff before you get to the Kyle model. The Kyle model for me was when it was like, this is when shit gets real, right? Like that's when it all kind of started coming together of like, here's a model of the markets and here's how we kind of arrived to these certain conclusions about, okay, in the Kyle model, it's how many contracts can you trade for a certain kind of a move, right? The Kyle, to derive the Kyle model, they use a Bayesian probability. So you maybe didn't do Bayesian probability in your high school math classes, or maybe you did, but you didn't spend very much time on it. But you can go online and search for it, and the equation that you use to do the derivation is not that complicated. But you're just going to see that all over the place where it's like, the actual math is not that complicated, but you have to know the theorem, and they don't sit and explain those basic theorems. They just say, oh, we use this theorem and then we get this resulting thing, right? But like I said, if you're reading that book for the first time, read through everything, read every word, okay? But don't worry if you're reading words that you don't understand. Okay? Read through it with the understanding that you're not going to understand everything that you're reading the first time. Right? First time that you read through it, the most important thing is that you understand the main takeaways. So when you get to the end of the chapter, and there's going to be these bullet points at the end of every chapter that are like, here are the main conclusions. And if you read one of those conclusions and you're like, well, I don't remember them saying anything about that, then that means I need to go back and reread portion of this chapter to make sure I understand why they're saying that or whatever the deal is, right? But get those main takeaways first, right? Because what I think is so great about this book is that it gives you this foundation for here's how we look at market microstructure and here's what we know, right? Once you have that foundation, you understand how all of those pieces fit together and why is the Kyle model so important, right? Because you can't use that exact number. I think it's a really good estimate for like how to size your trades. But if you tried to trade that exact number, market would probably screw you over. Okay, you would be like the majority of contracts in that instance. And the Kyle model is kind of a little more of a theoretical exercise. It just has some practical consequences and the practical applications is really what it comes down to. But it's still theoretical. So you don't want to use like those exact numbers. But why is it so important? Because it became the basis for so many other things that came after it for our understanding of how markets behave and function, right? So once you have all of the pieces together, and then you get to chapter 20, which is the informational content of prices, where they use everything that you've learned up to that point to basically paint to help us understand or prove essentially that why markets are so statistically efficient, but not very informationally efficient, right? Then it's like, it all comes together in chapter 20. So yeah, read it. Make sure you get the main takeaways. And then if you want to be a quant, read it again. Then go back and say, okay, this time, here's the formula. I want to be able to derive the Kyle model from memory, for instance. Coding Jesus recommends options, futures, and other derivatives by John C. Hull, so maybe you want to check it out. Yeah, well, he's doing more options quant stuff, so that's why that's one of the things that I find really fun, I guess I could say, about the YouTube space around this sort of a thing. Anybody that's doing like actual quant work is just instantly more reputable than anybody that's showing you charts and stuff like that. Like seriously, the people that come in and like their whole day is, okay, here's this trend line and this pattern, and you ignore those people. Just ignore those people. But the people that are doing quant stuff, like that's real shit, right? There's not very many people out there on social media actually talking about this stuff, because if you work for a company like that, they don't like you to talk about it. So you'd have to find somebody that's retired, and even then you kind of got to be careful about what you say, right? There's certain things that I did when I worked for Goldman, you know, like dealing with how many orders we were processing and how much money we were managing at the time and stuff that I can't talk about, right? I'm only really, you know, frankly, if they were the ones that had taught me this stuff, don't know if I would feel comfortable talking about it. I'm only comfortable talking about it because it's like public research, right? So you don't want to give away their edge, right? So there's not very many people, and you notice Coding Jesus has not posted a video in like a year and a half. I think that somebody silence him. Like he made a video that was, I was like the top problem solver at it was Jane Street. It was Jane Street, right? I was like the top problem solver at Jane Street, and I think that was the thing that made them go, oh, that's where he works. And then the people at Jane Street were like, oh yeah, you have this YouTube channel, but stop that. And that's why I think that's why he stopped posting. Could be wrong. That I think that's why he stopped posting. I got kicked from his Discord too, and he took off Discord off his YouTube. When you say you got kicked, do you mean like he shut it down, or do you mean like you did something bad and got banned? I think it's the latter. Well, so I'll tell you what though, guys. There's somebody out there on YouTube right now that I think is suitable replacement for Coding Jesus. This guy is a little bit more like pair correlation trading rather than options, like Coding Jesus wasn't. Oh no, it was the first. I didn't really talk in there. Okay, cool. Anyways, there's a guy named Filthy Quant, and I think he's mostly TikTok, but he now has a YouTube channel where he is like interviewing people. So he wears a mask. He wears a jeweled mask so that you can't see his face. Although I'm gonna bet that wherever it is that he works, that if, you know, the people there, if they knew that he was on social media, they might be like, oh yeah, that's you. And that they would come in and say, okay, you need to stop. But so far he hasn't been caught. And he did an interview with a Morgan Stanley analyst. And he's all the Morgan Stanley analyst's voice is all blurred out and everything to protect their identity. So there are people out there trying to get you some of the information that comes from inside the industry. I think ultimately it's a good thing, because I think that the industry could use more of this kind of quantitative stuff. I think that yeah, they got a lot of smart people there, but they're like PhDs, and like the people that are at the top of the quant game right now, they didn't come in and say, oh, I'm going to study all about finance and all that sort of, like, a lot of them were just experts in statistics like Nassim Taleb, or experts in physics like Jean-Philippe Bouchot, and they just applied the math that they knew to finance, and that's how they rose to the top of their game, right? But now it's, you got to get people that are specifically trying to get into finance, right? And I think that it's a hard thing to do, and a hard path to take, and a lot of people don't know that it's even a path and that it's even something that they should be like working towards, you know? So I think it's good that there are people on these platforms like YouTube doing that sort of a thing, right? Although generally speaking, I think that the best information of that kind still tends to be on LinkedIn, because the people at the institutions are much more free to be able to use LinkedIn. Okay. Like if you go to Goldman, Facebook is blocked and LinkedIn is not. Right? Wait, who's Filthy Quant? Filthy Quant. So I really like his content. And we've chatted back and forth a little bit on his TikTok videos. He seems like a genuinely fun guy too. So I feel pretty confident in like full on endorsing, you know. You gotta be careful, like especially like other traders. You know, like some of these people that come out, like it used to be, oh, we could talk about certain people and use names because we were totally cool with them, and now I'm like not so cool with them, right? There's some people, and I of course I never like endorsing these channels, so I guess it's okay. But you know, there's some of these channels where they were like there were other traders, and it's like, well, but they seem like they're at least they're not outright scamming you. They seem to be genuine about like that they're trying to trade and what they're doing and everything. And then they kind of went full on, oh yeah, I'm just gonna use all of the dirty tricks to get as many views as possible and kind of mislead people about my performance, and when I do badly, memory hole it a little bit so that you can't go and see the whole stream of when it was really bad. I think that's kind of dirty. I think that's kind of dirty. So I got to be really careful about like who I recommend, right? But when it comes to people from institutions, you know, then I feel a lot more confident about being able to recommend them, because then they're not pushing this bullshit, right? And they're not narcissistic. So you know who's not narcissistic, man? Probably the least narcissistic creator in the finance space that I know is I think you say her name Kyla Scan. So she was on TikTok, and it seems to me like she's become the lead financial creator in the short form video content space. Like so much so that she's producing content for Bloomberg now, right? And she was an analyst for I don't know who. I suspect it might be Goldman, but she was an analyst for somebody, and it shows. Like I'm telling you, man, when you've worked for an institution, I don't know, I'm not sure how I'm able to put a finger on it, or because I went through that transformation and I can't even really explain myself what it is, but it's just, you know, when you know, you can identify them like right out the gate. It's like, this person is instantly more reputable than other people, and she is really smart, and she worked for an institution. But she is like not narcissistic at all. So she has another channel that is kind of more like personal stuff. So her content kind of started out being kind of like Gen Z random kind of approach to things. So she'll make these videos that are kind of like that Gen Z random approach to things that are like, I'm going on a date and here are all of the funny thoughts of self-doubt that I'm having before it. Right? She makes lots of videos like that. Videos that almost make me think like, are you autistic? Like, because some of those self-doubts seem very irrational. They seem like only somebody that's not neurotypical would really be worried about, right? But not narcissistic at all. So this is what I was saying earlier, right? Is like, what's the difference between confident competence and narcissism, right? Narcissistic person has to be about me all the time. They hate it when other people get attention. See, I don't hate it when other people get attention. There are other people in the space that I absolutely want them to get more attention because they're actually producing good content. What pisses me off is when people are producing bad content or they're leading people into trading styles that are just not useful. Like I just can't stand the whole price action thing. It's just straight up. There a lot of the popular streaming traders, they're doing price action, and it's bullshit. And ultimately, I think it's non-beneficial to the trading community. It would be better if they shifted over and became informed traders, right? So I only hate the bad content, right? That's I think the biggest difference. And the whole thing is that social media kind of drives you into to acting like a narcissist, right? That's why you get some of these guys that, well, they're going to post video thumbnails where you know make a big deal about how much money you made, and then if you lose money, you just you don't mention that. You don't put how much you lost, and you kind of memory hole it, right? And it's not like that creator is narcissistic, right? It's just they've adopted narcissistic traits because that's what's effective on social media, right? But the split side of it is that the person in the finance space that seems to be doing the best right now, she's not a trader, but she didn't do live stream trading at least, but the top creator, not narcissistic at all. So you don't have to fall into that trap with that social media kind of draws people into in order to be successful. That's good, right? The official Muhammad Ali? What? Well, welcome. How are you doing? So that was something that I've discovered recently that was kind of good. I mean, I get the learning side more because you don't know at the beginning, but why do people tout it so much, you know? Well, the price action in particular, right? But I mean, I answered this question in my price action is garbage video, right? If like everybody's trying to make money, okay? Everybody's trying to make money. There's nothing wrong with coming in and trying to make money. And there's nothing wrong with trying to make money in the finance space from things other than trading, okay? Like I sell indicators, okay? That's a useful thing in this space. I give you indicators that you can't get anywhere else. It's kind of weird to say that you don't get these things anywhere else, at least not for NinjaTrader, but they're like very essential parts of trading, I think. And if I had my way, they would be included with the platform, right? So the service that I provide, I think it's a positive service, right? Not nearly as many people have bought it yet as I would like. I would like it to be in the thousands. Okay, we're gonna work on that. That's why I'm saying we probably need to make a lot more videos about NinjaTrader, right? Okay, but it's a useful thing for the marketplace to have that service out there. So there's nothing wrong with trying to make money from the financial space, right? But that can drive you into doing kind of shitty stuff, right? So and that's the case with price action, is that price action kind of sits in this kind of strange middle ground where it's just vague enough to prevent traders from realizing the problems with it, but it has like a really neutral name. It's like, who's going to argue that the movement of price doesn't matter? Except for Seth. Who else is going to argue that, though? Like, everybody thinks that when the price moves, that's an important thing, right? The only reason that you think that price moving is an important thing is because that's what makes you money, right? But it doesn't predict the future. You just gotta understand that. The movement of price is the result that you're looking for. You're trying to predict the movement of price, but it's not one of the variable inputs. You try and put that into your formula, you're not very likely to get very good predictions out of it, right? And so that's why price action is the way that it is. It's good marketing, Basically, if you go and you make a channel and it's primarily about price action, you're going to get more hits. You just are. You have to pretend to act out. You have to project to get their attention. Nah, I think that I still have some questions and struggles about how to deal with social media and YouTube and the influencer world to get our message out there, because I do feel that both the services that I provide are valuable services, and that more people that are trading could benefit from, one, and two, that the knowledge and information that we're sharing that I did not come up with. Okay, I'm just the one that's kind of digesting it into something that average person can understand. But I think that this is very valuable information about markets that could affect decisions that people make, including who they vote for and how they approach investing and how they approach and think about the economy. That is very valuable, not just to you individually, but to society as a whole, because I believe that society as a whole is very often making erroneous decisions because of this false belief that the market is perfect and always right. Once you understand how informationally inefficient the market is, you realize that I can't just look at a chart to decide what's actually going on. I actually do have to dig down and understand all of the economic numbers to try and decipher what the current conditions actually are, because those aren't always reflected in the price movements, right? I think that's very valuable information. So to me, I think that I went from pre-2020 thinking, well, you know, if we ever get big, maybe it'll happen and we'll just see. But it doesn't necessarily matter because I'm more interested in trading, etc., right? And maybe if I get really popular, it might actually be kind of detrimental to my trading. So I don't, you know, it kind of makes me a little bit nervous, right? But I had to make that shift once I understood that what I knew was important. That wasn't just valuable, but that it was valuable enough that the rest of the world needed to know it. That I couldn't just keep it to myself and try and make money off of it. That the benefit to society was such that I have the obligation to try and get it out there, right? So I made those videos. I think that those videos are really good. They're doing pretty okay. I mean, I wish that they had tens of thousands of views, but they're doing okay. And I think that over the life of the videos that they'll continue to do well, right? I need to get the message out there, right? How do I do that? It's hard. It's hard. But I feel like that I'm closer than I was before, right? Like, I understand that coming in and just bashing on price action isn't the most convincing to people, right? I mean, I always kind of knew that, but I don't know. Like, we got it out there. We made the video. I think that the price action is garbage video was kind of like an important step because you have that video, but that's probably not the one that converts everybody, right? The one that converts everybody is the one where you teach what is actually going. You teach informed trading, and you do it in a way that speaks to people, right? I think people are more interested in, like, what is it that I can do for you, right? And there's a lot to work with there, right? Because how many of you have been in this situation where you get in the move and just when you think that it's like this is the move, and you get in it and then it's going for you and you're happy about it, and then just as quickly it all comes back? Like, why does that happen, right? We can answer those questions, right? So that happens because of the square root law, right? So if somebody comes in and takes a counter trade right afterwards, it makes it easier for it to move and come back in your face. And that's why it happens all the time, is because all of these speculators that are trying to trade informed, they know that happens, and they're always kind of keeping an eye out for a situation where they can pull that kind of move, because that's the best move, right? Is that one where it washes out the previous move, right? This, how often you get all these times you think you know what's going on, and then like it just turns into a dismal failure over and over and over again. But once you understand informed trading, all of these problems get solved. Like, when was the last time that I found myself on the wrong side of a huge trend? Right? I think that last month there was one day where I lost $40, but that wasn't that bad. That was like 2 trades, and I like mismanaged. It was more my own mistakes that made me cause the big losers, right? But the days where like I'll try and go against the trend like 10 times, it doesn't happen anymore. Why? Because I'm informed, and when something is trending like that, I usually know why, right? And I don't get on the wrong side of it, right? All of the problems that traders have, the common problems that traders have, so much of that gets solved by informed trading. You don't have to be in this constant space of like, is it this trading strategy doesn't work, or this is just a drawdown, or am I not trading very well, or am I crazy? Informed trading, you don't have to worry about that. You know why? Because you either know what's going on or you don't. If you don't know what's going on, just sit there. And after the fact, if you lose, you can come back and you can say, okay, why did I lose? Well, I didn't actually understand it very well. Now that more information is out, I understand why they were trading the way that they were, and I understand why my understanding of it was wrong. It's either that, or I understand the liquidity and I can see where that was just kind of like a random loser where I got stuck in the wrong spot, even though I had the trend right. And those will happen, but they get far washed out by when you catch the trends. And then you no longer have to play the head games, right? Now psychology is just about me being my tops and making good having a good decision making process, and you don't have to worry about all this bullshit about like my undermining myself and all these kinds of head games that you have to play with psychology, right? It solves so many problems that traders have that are really, once you realize that markets are more statistically efficient than they are informationally efficient, you realize that all of these problems that traders have are really self-inflicted, right? They're really self-inflicted. Did anybody at Goldman use TA? That says the traders that I talked to didn't know a darn thing about it. They literally had no clue what I was talking about. Like, I was pointing out these chart patterns and stuff that like I was saying, like an ascending triangle. Ascending triangle is the one pattern that I continue to see in markets that interests me. Although I'm usually seeing something already in the flow and in the informational content out there, suggesting to me that it wants to move higher, and before you ever see the pattern. But that's like one pattern that is interesting to me. I was talking about it, they didn't know anything about it. Like, what is the probability that it's going to go higher or lower? The people that I talked to were very smart. Like, when I say very smart, I mean like they were very socially intelligent in a way that I'm not, right? Because if I was talking to them, I would have been like, oh yeah, you read that book? That book is total bullshit. Just forget everything that you learned about that. Here's why that doesn't work, etc. They didn't do that. They're like, oh yeah, maybe you could teach us a few things about patterns and stuff. But like the implication was there, like they knew. None of us use that because it's not very effective, right? So they didn't have to say anything because they knew I would figure it out on my own. None of them were using it. There was one guy that was in derivatives that would post a regular technical analysis letter that I loved to read. But over time, I kind of realized that like the things that he was using would seem to fail at key points. And then he would like shift over to something different. So I think coming in and trashing TA can work. But Coding Jesus blew up that way and would get on live call debates, and it was amazing. I've never done like a live call debate. That would be interesting. But you're right. He did blow up that way. I mean, I have some videos like that, but I think that the things that work for Coding Jesus probably not work for me, right? I have a way of saying things that if you agree with me, then it's really like, oh yeah, like that makes so much sense, right? And I'm totally with you on it. And I think that it has to do with the words that I choose and like the sense of certainty and finality to the statements, because I'm very confident in what I'm doing and that I don't say things unless I have empirical data to back up what I'm saying, or I feel like I understand that issue, right? And if you don't agree with me, then that pisses people off. That really pisses people off. They do not like to come into a situation and have somebody say that, like, everything that you've based your whole trading strategy and personality on is nonsense. It's very grating. Right? And I'm not even sure I can put a finger on how I do it, but it's kind of this unconscious thing that I picked up from arguing on forums so much when I was a kid. Was I just learned how to really, get under people's skin if they didn't agree, right? Because that was kind of the whole thing. I guess it just goes back into the social media, that's just like social media is so toxic. It's like I learned to do that better than most people on my Facebook. People on my Facebook are afraid to argue in my comments. Like, straight up. In the beginning on Facebook, like 2016, like we had some good debates and stuff. And there was one or two conversations where I just so thoroughly dismantled somebody that, like, people that disagreed with me were afraid to comment anymore. That's what I think it was, at least. I mean, a lot of it is just people just left Facebook, right? I'm not as interested in that, right? Like, I'm kind of more from the perspective, the kind of perspective that I'm taking now is like, what do people actually want? Right? Well, people want what's good for them, but I think that the thing that people want more than anything is to feel important, right? To feel important. And you know what? It seems like everybody wants to feel important. It almost sounds dismissive when I say it like that, right? Like, well, how you feel, how important you feel, it's not really an important thing, but it is, right? It's important that we help everybody in this world find their place where they're contributing to society. That's what makes the world better. And not everybody is going to be the big star on, not everybody is going to be Elon Musk. That doesn't mean that finding your own place is not important. And especially for you guys in the trading world, what we're learning about the informational content of prices is that the place that we hold is very important and really kind of underserved. There are not enough people out there sitting here and going, okay, what is the actual situation? Where is this going to go from here? Etc., etc., etc. Because so much of the activity in the institutional space comes down more to rebalancing, essentially, right? The informational side is weak compared to all of these funds and stuff that have to rebalance at the end of every month and are basically being index funds. The index funds basically became too big. So it's important for you to not just be an informed trader, but to find a community where you can work together with other informed traders, because it's hard to do this all by yourself, right? So we come together as a group. We have been so much more effective as a group. And you can see that in my own performance. Like, I started out as an okay trader, like just from like a trader perspective. I started out okay, and I was pretty good at looking at what's going on and kind of figuring out what's different and all that, because you know, I'm just ADHD, I see everything and then I can zero in on that one thing that's different, right? But there was things that I didn't know, or there was things that I didn't know I knew, and I wasn't really truly living up to those things that I knew because I didn't know them in a way that I felt like I could prove it to everybody and write the formulas down and all this, right? Once I can write down math and stuff, I was like, heck yeah, right? I would never would have gotten to that spot without the community that we have here, right? You come in and you want to trade and you want to be a big deal. Well, when I come in and I say, you're probably not going to become a millionaire from day trading. You might want to just keep it as a hobby. I mean, that's very disheartening to people. But the split side of that is you should still do it. You should still do it. And you should come here every day and talk with us and talk in Discord. And when you see information and comment on it and lend your voice to what you think the current situation in the markets is and how you think that certain things will come about. That's an important part of our marketplace. We need more people like that. And contributing to the community ends up being a very valuable thing. You truly are. I truly believe that when you come into Discord and you lend your opinion to what's going on in the market, that you're making a valuable contribution to society. I honestly believe that, right? And at the same time, you're finding a place where you belong, because it is where you belong. You're a trader. This is where you're really supposed to be. This is the way that it used to happen on the exchange floor. You'd argue about what the market is doing and let's see where it's going. You didn't just sit there and look at charts all day and yap about charts. You need to talk about the actual, like, what those charts represent. What's actually going on underneath the scenes is causing those moves to happen, right? It's really where we belong. It used to happen at the exchange, and now we have Discord. Right? That's kind of the approach that I take nowadays, or that I'm trying to move towards, right? Because people, you know, that's much bigger driver of people. And those of you guys that are here every day, why are you here every day? Because you understand that, right? And you understand that, like, I know all of your names. Like G59, I know. Like, oh, I haven't seen him in a while. Now he's popping back. He told me where, you know, what his situation is. I know all you people. There's less, when we talk about regulars that are here every day, there's less than 200. So that's enough for my brain to remember all the names. Probably what I should start doing is taking creepy notes. So I'm going to come over here. Well, I don't have my notebook over here. You know, open up my notebook and start, okay, G59 on the 2nd of November told me that he failed a funded trader program. By the way, you didn't say, but which one was it, G59? I've been having a hard time getting a handle on, like, which service is actually the most popular right now. It was Apex. Okay. It seems to me, I could be wrong, but it seems to me that Top Step Trader has declined in popularity significantly, and that Apex and Tic Tac or whatever it's called are like the leaders now. What was the one that I did that was Apex? Were the ones that I made videos about? I don't think that that's right. Oh, Earn to Trade. Earn to Trade was the ones that I made a bunch of videos about. I don't think I've ever made one about Apex. Apex and Tic Tac are like the newer ones. Yeah. Well, there's like, dude, like, the thing that's so crazy about it is, like, Top Step were the originals, right? When I started, Top Step was it. And then Like everybody saw how much money they were making, and all of these rich guys were like, oh, I want in on that. And like 12 of them started up, right? So there's like what? There's Lilu trading now. There's a couple that are like more Forex based now too. Like it gets kind of crazy. It gets kind of crazy. You know what I think is funny though is that like I think that so if I was to start a funded trader program right now, oh, well, you know what I think it is that I think that if you want to do a funded trader program for stocks, I think there might be more strict requirements on you. Maybe there's regulatory hurdles to doing it. Because I don't think that futures is the way to do it anymore. If you have micro futures, like why? What's the drive to bring people into the funded trader programs unless they think they're really good? And, you know, it's like, well, I don't have enough money, but I know I'm really good, so I don't want to start with micros. I just want to skip ahead and start making big bucks right now. Otherwise, why wouldn't you just learn on micros and build yourself up, right? You wouldn't have to build yourself up for very long to be able to trade the same size that you can on the combine. One up. There you go. So you got Top Step, One Up, Earn to Trade, Apex, Tick. What is it exactly? And Lilu. So that's 6 that we can name just right there. Tick. It's just Tick. Tick Trader. Right? Top Step, One Up, Apex, Tick, Lilu. Earn to Trade. Earn to Trade was the ones that I made videos about though. And that they did a sponsored video eventually. Which, I don't know. I enjoyed making that video. I wouldn't mind doing another one, to be honest with you. Just because like this time, if I did it again, like that time it was like, well, let's do our robot, etc., right? If I did it again, nah, that's not the way that I would do it. If I did it again, it would be like, hey, let's trade the FOMC meeting with 4 contracts. Have a position on before they talk. Right? And if we're really lucky, we could have days where like, you know, we pass the combine like 3 days in a row sort of a thing. Because you could just size in and only wait for like the big moments, right? Gamble basically. Earn to Trade has a nice GUI, but I don't like the consistency rule, and the free web-based platform they offer sucks. Oh, I didn't know they had a web-based platform. I have to like, the thing that I think is kind of interesting is that the thing that would really differentiate the combines, aside from the rules, is really the infrastructure behind them. And that's something that like most people are never going to talk about. I think that from the technology side, I have the experience. I could write a really good platform for that. Because I would go in and I would use KDB. I would use KDB, have KDB linked up to Rhythmic and run that. And that's what would keep the risk rules. But it's kind of fun, the ones that don't have the consistency rule, right? Because those ones actually make more sense to me, just because like, what is the real advantage to using the combine? You can take risks that you wouldn't take on your own account. Well, the consistency rule kind of says, no, you can't do those. You do those, you're not going to get funded still, right? You should try and pass that. Well, if one of those services, I think it was Tick Trader that emailed me yesterday, and I was like, well, I'm not like a huge fan. I tell people to trade their own accounts, and I've made videos about, but I'll do, if you want to work together and make content, then I'll work together with you. Just depends on what you want to do. So if they want me to do something like that, then I'll do that. Yeah, so you know what I was realizing? You guys can help me out with something. You guys. I don't like using the phrase you guys, but because I was always taught not to use that because like people, it can turn people off. But I'm going to say something positive. You guys can do so much, probably more than me, in helping this channel be successful, right? Because number one, when you're here and you participate, and that encourages other people to participate and help find their place. So when you're here on YouTube, you comment, and when you go into Discord and you comment, you are providing you have no idea how significant that contribution can be. Because maybe you don't ever get rich or anything, but maybe you help encourage somebody else that does. There's those sorts of butterfly effects going on, right? But then the other thing is that I'm finding one of the things that's really helping people in the recent past really become like bigger names is like you're on a podcast, right? You come in, you're on a podcast that gives you a bunch of like it's just everything's podcast now. So you do a podcast and then all of the pieces of that podcast get like chopped up and turned into short form content, sort of a thing, right? I don't go out and seek to be on podcasts. It's not something that I think about. I keep to myself. I don't interact with people that do podcasts very much, right? So if Seth is going to get on podcasts, the most likely way for that to happen is you guys watch a podcast and you say, I would really like to see Speculator Seth on this program because that would be an interesting thing to see, right? You start mentioning my name other places, and then maybe they'll say, oh yeah, let's do bring Seth in, right? Because otherwise I don't have an agent or any of the connections to be able to do it, right? So the only way that it would happen is if you got individual viewers are out there mentioning the name places and bringing it up, right? Or like when they have a thread on Reddit, because I'm not going to post about it myself. Reddit hates it when you do that. But when there's a thread on Reddit and they say, oh, who are your best people to watch on YouTube? And then you come in and you say, oh, you should watch Speculator Seth because he has a lot of really key information that really helps us understand why trading is so hard and how to kind of get around some of those problems so that you really stand a chance instead of wasting all your time on things that we know don't work, right? So you guys can help me so much. What I really need to do, I don't know how I would do it, but I need to find a way to reward you guys better for participating. You know what I mean? Maybe what we should do is, at least for chat here on YouTube, is we should make like a I would like there to be like a monetary reward for it, but like there'd have to be funding for it, and there's kind of all these other problems about how people want to game things that come off of that would be a problem. But let's just say just for the reputation or something like that, or maybe we'll bring them on. So like maybe I should make a bot, and like every time that you guys say something and participate, then the bot will give you points, right? And if like you ask a question that I end up answering, you get extra points or something like that. And then at the end of the month or the end of the quarter, let's say quarter, we have the most valuable commenter award and we bring them on or something like that. More discount on Jigsaw as a reward. Maybe I could, if it's every quarter, I could do something like that. I have to go and look at and see what I can do in that. More of a discount on Jigsaw as a reward would be nice. Although, I don't know. I think that it would need to be more like a $500 gift certificate on Jigsaw is what it would need to be, right? I'd be like, maybe I could talk to Peter and work something on it. Because the thing is there's the live trade license, right? So it's like if you're not using Jigsaw right now and then you win it, right? Then it wouldn't. And if you already have Jigsaw, then that also wouldn't make sense, right? So it needs to be something that like everybody would like and would want to participate for, right? So,
like $500 on Jigsaw would be like, okay, so if you don't have Jigsaw, now you get it, which is good. And if you already have Jigsaw, then you can use that to pay for your next year live trade license, right? Or it could do the same thing for NinjaTrader. Everybody could benefit from having NinjaTrader. It's probably more. It's actually if I was to give away a free license for NinjaTrader, that would probably be more valuable, because people that are on NinjaTrader and also want to use Jigsaw, not all of them can do that. But but then if it's the full version of that and you're not using NinjaTrader, then that still doesn't work. That still doesn't work. Gotta think, like, what would be something that every single person on here would benefit from winning. So I think that just the trade platform wouldn't do it. Maybe it would be more of a subscription to News Squawk, maybe. Yes. What if it was $500 gift certificate for Financial Juice? There you go. Make a crypto called Sept Coin and give away Sept coins. Well, you know what I could do is I could just give away garlic coin, right? I own a lot of garlic coin. I have enough garlic coin that I could give away a garlic coin a day for the next, next forever. But then you have to have a way of, so there's the other issue of doing like a contest sort of a thing, is registration. But I can do that. I would have to write something. I'd have to write a robot that reads all of the messages and allows you to register somehow. Like, you could go to a website and you could register your email so that if you win, it has your email. But you'd have to register first, or otherwise you're not participating. It would be cool if YouTube had these kinds of tools built in, like on on Twitch. They have like, when for watching for so long, you'll get these points, and then you can use those points to like show a message that gets highlighted, for instance. I wish that YouTube had stuff like that. I'm sure that they probably do eventually. I think that they are moving that direction, and I bet you that when YouTube does it, that it'll be better than Twitch. But it's not there yet. Well, Financial Juice would be my top pick. But I think I could probably pull something that's worth $500, but I don't know. I kind of feel like, have you considered Rumble? So I made a Rumble channel and I uploaded one video. It was like I think it was the Inelastic Markets Hypothesis video. Just to see if I post a video and I don't do anything at all, what does it do? Like, how much discoverability does it give you for like not doing anything? Here, I'll show you. Rumble.com. Oh, I have to sign in. Oh, it says I have 24 Rumbles. So how do I get, what does a Rumble? And why do I have 24 of them? So I published this 7 weeks ago, and I've basically got, on average, 1 view per week. Right? Stats and analytics. Does it tell me? Does it give me any information about like where the views came from? No. It's not very good analytics. Yeah, you found me on Rumble then, cool.
just Speculator South on Rumble. I think I can link them so that all of my videos get republished over to Rumble, right? So might probably need to go and do that. I did that with what's the other one? The one with the stupid name. There's another YouTube channel that was kind of more decentralized, and all of my uploads have been going over there. So if the YouTube channel ever got taken down, all of the videos would still be out there, right? But to be honest with you, even though I have some really big concerns about how big tech decided to be like arbiter of truth and silencing people that probably shouldn't have been silenced, let's say, because I don't want to say like it should be like absolute anarchy free speech. I think that a platform should be able to enforce some level of minimum standard, because if you don't do that, then nobody wants to come to your website anymore, right? When I go to Rumble, I don't find very much content that I like, so I have like really big concerns about that stuff, but I am taking the approach that I hope that YouTube just figures it out, that they're going to see that, yeah, we were too heavy-handed or whatever the deal was, right? Because YouTube really is the best platform when it comes to serving their creators and their community. I've never seen anybody come anywhere even remotely close. And that is why I am and will continue to put most of my effort into YouTube. Because when I look at the landscape right now, like I said earlier, I definitely see a change coming in social media. Facebook is like completely screwed. Who knows what happens with Twitter? That's all changing. And YouTube just changed their interface. But when I look at that landscape, where do I think is the place to be? I think it's YouTube. It's not TikTok. It's YouTube. In fact, it wouldn't surprise me in the least bit to see TikTok die in the long run. Just saying. Nothing illegal, but speech should just be free in my view. So basically how old internet was before the normies and institutions ruined it. Yeah, I mean, so like, I'll give you an example, okay? If somebody were to make a YouTube video about me making fun of me being bald, I don't think that I think that should be against YouTube's terms of service, and they should be able to punish the other channel for doing that, right? So it's not that it really bothers me when people call me bald. I'm basically I'm old enough where I don't have to care about how I look. I know that when I was younger, I wasn't bad looking. I'm small, not small, but I'm pretty trim and thin, right? Not a big bulky guy, okay? Which is not as advantageous in the mating game, okay? But I know I'm not terrible looking, and now in my old age I'm just an average old guy, and I'm bald. Like lots of average old guys are bald, and I kind of prefer being bald. It's less maintenance. I kind of like it, right? But I'm just saying, if you create a platform where anybody can come in and just start slamming anybody for like immutable attributes, that's where I feel that a conversation is becoming toxic, and that you're hurting the platform by allowing that, right? So I think that they should be allowed to ban people or reprimand people for that, right? But what I don't agree with is if you make a video suggesting that lockdowns are ineffective and that we shouldn't be doing them, and I don't think that YouTube should be making decisions like that, right? I think that that's harmful to society. I think that, like, look, I was totally on board with like 2 weeks to flatten the curve sort of a thing. I think that made a lot of sense. I don't think that it should have been 2 weeks nationwide. I think it should have been, okay, if you're a state and you're starting to see this many number of cases, then do a 2-week shutdown to flatten the curve. That would have made more sense, right? But the way that it happened was like nobody could speak up against it to say this is a bad policy, guys. We shouldn't be doing this. And so it ended up going full bore in some places where they really just like shut down everything and businesses disappeared, and it was just absolutely crazy. And would that have happened that way if the YouTube and so on and so forth had not done the censorship, you know? So what all that means is I think I would very much prefer that the platforms were just responsible enough to do the right thing, to have rules that are just really, really specific and well thought out. And I think that a lot of them weren't, right? And a lot of them were too ideological. I digress. It's time for me to get going. So I will see you guys a little bit later though. So if you want to talk about this stuff, we can talk about it more, but we got a Fed meeting today, so try and pay attention this time because this speech is going to be really important at the Fed meeting. So I'll see you guys then. In the meantime, stay excellent, team.